focus away from equities now. Manisha Gupta is here to tell us what she's tracking in the commodities space, and no prizes for guessing, it is oil.
Oh yes, it is, and a very, very volatile market that's beginning to be. We saw 2% of surge in the New York session yesterday, but in the Asian markets right now, we have seen some pressure come back. So yeah, it is going to be about the OPEC Vienna meeting, the trade tensions between US and China, the Goldman Sachs report which says that $82 is back or perhaps would be back by this summer, and of course the increase in US production. So there are just whole host of all of those factors to take cues from. But joining us on the show now is Peter McGuire, who is headed to Vienna. Peter, hi, you are going for that all-important meeting. What is your sense? What are you hearing? And what kind of a decision really can we expect from this OPEC meeting this time?
Well, I think where we're looking at, it's going to be a very interesting lead up to Friday's meeting, and then what actually transpires. You've got one camp, naturally, the Saudis and the Russians and their cohort. And then the other camp, of course, the Venezuela and Iran. There seems to be a disconnect between the two parties. I'm not sure whether they'll broker a deal in the short run, leading into Wednesday and Thursday. But it's not unusual for observers to take on board the essence of OPEC that can change during that actual day itself. So as they meet and as you see different parties playing to their strengths and trying to get a cohesive unit, I think it's going to be a very interesting meeting. You've seen what's happened over the last matter of 2 years with those production cuts, and now it comes to a different point of view.
Well, absolutely. While there is, of course, a lot of uncertainty as we get into this meeting, Peter, but depending on what OPEC could do, whether it is about increasing supplies or keeping it as a status quo, in both the events, where do you see the crude oil prices headed?
I think it'll probably, it'll be range bound. I can't see any big breakups to the upside or to the downside unless you see some geopolitical concerns or weather outages. The US dollar has had a very, very strong uptick over the last matter of months, and it's sitting now at 95, that US dollar index. There's probably further upside there, naturally, with Fed rate rises leading into the rest of 2018. So Brent, I think, will probably trade that $70 to $75 range. You may see a little bit higher, but it just depends on what the production cuts are. And WTI, I think it's going to be range bound 62 to 66 for, over the next couple of months. But remembering weather outages can greatly impact price quickly, with the hurricane season starting in the US in the next, matter of weeks. So it's always an unknown when you're looking at that Mother Nature impact to pricing.
And it's not just the crude oil prices, Peter, because a lot of those cues really seem to be translating into the metal prices, which have declined for a third straight day. We, of course, have seen weak Chinese data. The whole US-China trade retaliation is yet another thing. And, of course, the strength in US dollar. Which one of these factors really are you watching closely?
I think that's going to be a further softness over the next couple of weeks. Again, that US dollar strength and the uneasiness or the uncertainty as far as trade wars. And the heat's come out of the metal market, in the last matter of a week or so. Dow's down 5 successive sessions. So, all of these factors at play need to just be absorbed into the market. And from a volatility side, crude oil's down. It had a bounce overnight. So, it may take, edge up higher over the next couple of days. But there are just so many moving parts when you're looking at to try and forecast price movement in the short to medium term. It's certainly a trader's perfect storm at the moment because of those large swings, and they've just got to be very mindful from stop losses and, of course, where the market's trending. I think you'll see some whipsawing, and that's not uncommon leading into OPEC meetings, and that'll naturally wash across to the metal market.
Oh yes, all the emerging markets, or rather all these sectors really would be watching out for that OPEC meeting. But one final question, Peter, and so while there is so much volatility across board, whether it's equities, currencies or commodities as well, which is a better trade that you see emerging in all of these sectors?
I think you probably have to look at, US dollar. If you're going to be a trader, you've got to be, it's hard to go against the Fed at the moment. And that further upside there is going to be very, very nice for, FX traders. The market seems to be one-way traffic, and, if it takes a 96 or 97 handle for that US dollar index, I think that's going to really underpin from the strength of it, probably softness in gold, and at the moment it seems to be a nice trade to be involved in. So, yeah, possibly short metals. Oil will probably, oscillate and go a little bit sideways, but it'd have to be strong US dollar, and that's going to be, a trade to, absorb and be a part of over the next couple of weeks.
Oh, well, point taken, Peter. Thank you so much for joining us. So that clearly is a top trade emerging. Further strength in US dollar, but weakness in gold and the base metal prices. There's an advice of going short on that yet again for next couple of weeks at least.
All right, Manisha, thank you very much. Appreciate you joining in and taking us through those details.